Bloomberg Audio Studios.
Podcasts, radio, news.
I'm Francine Lacqua.
I'm David Merritt.
And I'm Allegra Stratton.
We're back in the studio. It's back to school week for lots of people. Back to school vibes around London, don't you think?
It feels like back to school, all three of us in the studio.
I've just come back from America and the political cycle is heating up. There's a lot of drama and tension. And what caught my eye was this story that Americans are now swarming to London for properties. And I've heard this firsthand, actually, from friends in the US. People are looking around the world, and London really stands out as a place where if all hell were to break loose in the US for whatever reason, this is increasingly the haven that they're looking at.
But people come up to you and say, "Hey, you're a Londoner. What's it like? Should I move there?
Yeah, do you know someone?
Can I have your?"
No, I in my entirely unscientific survey of New Yorkers' residential intentions, I mean, you know, there's a lot of worry in America about the political situation, the social situation. You know, gun crime is a big concern. The drug use on the streets is there for everybody to see. And of course, we've got this big election coming up. And people have said to me, we're seriously thinking of relocating our families. And then having heard that, when I read this great story by our very own Damian Shepherd saying that actually the Americans are propping up the luxury end of the housing market, we've actually got the data in there to prove my very unscientific survey of New Yorkers.
There you go, the science behind the hunch. It's Damian Shepherd, and he wrote a piece saying, look, U.S. buyers are snapping up some of these pricey digs in London. So on today's show, let's deep dive into what's behind an American rescue of London's battered luxury property market.
Welcome to the City of London.
The city of
London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The city.
The city.
Welcome to In the City.
Stand clear of the doors, please.
Damien, welcome to In the City.
Hello. I mean, I go for a lot of coffees with London brokers, and the one thing they need right now is Americans. I don't particularly like using this word, but the top end of the London market is resembling something like a bloodbath at the moment. Not that we have that level of sympathy for the billionaires often, but I track these transactions that happen, 15, 20 million, 35 million, and this year they've just fallen off a cliff. There's a lot of concerns among the ultra-rich, which is forcing them to look to other areas like Milan and Dubai. And there's lots of reasons why the Americans are a crucial clientele at the moment for the London brokers.
So scaring off most buyers at this end, and is this the nervousness about what might be coming under the new Labour government? So, you know, with a lot of we don't know any of this, do we yet? But there's a lot of speculation about changes to capital gains tax. Who knows? Maybe something on stamp duty. There's the non-dom situation, which has already shifted from the previous government, but perhaps some more measures there. So high net worth individuals who used to make London their home, they've been talking about leaving. Are you actually seeing that now in the property market?
We are. And the thing you mentioned there that's so crucial is non-doms. I mean, this is the term that's striking fear through the ultra-rich in London at the moment. And that's what is, you know, prompting them to look at other destinations like Milan and Dubai. The reason why the Americans aren't quite as susceptible to this is there's big currency discounts at play at the moment in the London market. So there's already big discounts happening when that buyer and seller expectation gap closes. But then when you bring in the strong dollar versus the weak pound, this is, you know, giving the Americans an incentive to say, you know what, the tax situation doesn't look as great as it did in the past, but I've actually got a bit of a, you know, incentive here to make this deal happen. And they're not dallying in the way that other international buyers are. And that's one of the reasons why the brokers are prioritizing the Americans at the moment.
So some international buyers looking elsewhere and the Americans stepping in and filling that gap.
Exactly. I mean, like I said, we're not seeing many deals above the £20 million mark, but one recently, for example, was a £32 million deal in Notting Hill, and the buyer was an American moving his family over to start a business here. The same broker told me that roughly a year ago, there was an £18 million deal in Kensington of a family that moved over. One of the main reasons was gun crime and concerns about sort of the social and political situation over in the US. So there's lots of factors at play here. But it's certainly a trend we're seeing.
And those properties, the 32 and then the 18 million, were they discounted already because the top of the market's not that confident? Or were they picking up a bargain and they were moving because of that? Or were they happy they paid at the top end?
they're picking up a bargain either way because of that currency discounts, if we're calling it a bargain, Allegra. Not my idea of a
they
bargain.
think it's a bargain.
2 for the price of 1. But, but are these houses that also almost doubled in price in the last 10 years?
They are, yes. So, if you look at the long-term growth of these mansions, which are often bought as an investment and sometimes left empty for a very long time, their appreciation has been massive over the past 20 years. But still, everyone, even the ultra-rich, they love a bargain. And this is one of the reasons why, despite the fact we're seeing this bloodbath, as I possibly regrettably called it earlier, there's still customers.
Yeah, 6% of all very high-end, so that's what, more than 20 million or 10 million houses are bought by Americans.
Yeah.
That was the stat last year. I mean, it's massive. Why?
So, if we take it over to the US, we've spoken lots about the currency discounts at play here. One word which everyone hates at that end of the market is uncertainty. Now, the US election is definitely playing a part here. So when Donald Trump was leading in the polls, there was brokers telling me there's people already making plans. There's a nervousness about, again, that word, the uncertainty of a Donald Trump second presidency. Now we look more in a deadlock between Harris and Trump, but still not knowing which way the election is going to go is, causing nervousness around policy and prompting buyers to look elsewhere. So there's issues around the political spectrum. Gun crime comes into it. I've heard about drug use concerns over in the US, levies on assets. There's plenty of issues at play here, and it's just those little things which are pushing the US buyers more than internationals from elsewhere to make the move.
You wonder, don't you? Because, of course, a few weeks ago, it seemed like Donald Trump was, streets ahead. And then the whole race, the political race has turned on its head. In a sense, more uncertainty has been brought into the system because now it really is a bit of a coin toss who's going to win. They're in a statistical tie. And so people, I guess, are hedging their bets in that environment and wondering maybe London. We've got pretty boring politics now here, haven't we? Relatively. I mean we've been through our years.
We don't really. There's a lot we don't know, though, on this new government and what they'll do in that budget October 30th.
That is very true. We don't know what they well, we know what she's not going to do. We know she's not going to raise income tax. We know she's not going to raise VAT unless she really does break her promises. But what's left are increases on the wealthy, aren't they? Presumably, that's what everyone is assuming. I could be proved wrong, but how come that isn't factoring into these rich Americans thinking, Damian, that, well, actually, you've got a new government in place in the UK, very stable as they may be, but they're going to come after my wealth, aren't they?
There is definitely nervousness around that. I think, what we're seeing here is that nervousness for a different international buyer who's not got these incentives currency-wise and discount-wise is going to cause them to say, do you know what? No to London. I'm going to go to Dubai. I'm going to go to Milan. It's just these extra incentives that are coming through with the Americans, which is, allowing them to prop up such a depleted market at the moment. So, like you said, our politics does appear a lot more boring than the US at the moment, but that October budget is crucial. And if we have this conversation again afterwards, I'm sure there'll be many more factors at play.
I'm curious about the wider effect of this as well, because yes, so the Americans are in the sweet spot. London looks appealing if you're an American sitting on capital that can afford a big slice of London real estate. But the rest of the world, as you say, seems to be abandoning London, and the non-doms, which again was started by the previous government, that change. Is there any hope or light at the end of the tunnel? Should we get a range of sort of modest measures from Rachel Reeves in the autumn budget that some of these people may return? Or do you think that flow to the rest of Europe or to places like Dubai is the trend that's going to continue for the foreseeable future?
I think, without trying to sound like an estate agent, the appeal of London is endless. I think that, the schools...
There we go.
You're good.
Thank you.
You're good. You're supposed to be ringing off the
considering a job change. The schools are fantastic, and there's a lot of
they're going to tax those as well, of course. But
yes. There's lots of pockets where internationals will go, and there's some fantastic schools and green space. London is, a financial centre. It is the finance hub of Europe. So it's always going to be a destination. And I think we're talking right now about short-term to sort of medium-term struggles. The long-term looks good for London.
So if you're a top-end London property broker dealing with these multi-million-pound houses, are you rooting for Donald Trump to win? Send more business your way? So we're obviously impartial on this podcast about the outcome of the election, but
possibly. Look, there is differing opinions on this. Some brokers have said, Trump is actually very good for business and wealth generation over in the US. So this isn't black and white, Donald Trump, everyone's going to leave. But there is certainly brokers telling me that people, when Trump was leading in the polls before Harris came in, there was definitely people plotting a move to London for that exact reason. Let's have a look at the data. I mean, the last time Trump was president, we saw a 20% increase compared to Obama's term in London, in Americans moving to London. There was a strong dollar to weak pound discount at play, but there is now too.
There seem to be a few signs, particularly in the last week, I would say, of possibly a bit of a turning point for the UK housing market. We've talked about a lot on this podcast about the difficult year or two we've had. Our very own John Stepek, of course, the ultimate oracle on the housing market, called it last week. His newsletter, he's the author of the Money Distilled newsletter. He's got the headline, "The UK housing market is back from the crash." Do you agree?
So I think the context John was talking about was in terms of transactions. A lot of people, I'll be quite honest, I was really hoping that house prices were going to fall dramatically, so I'd finally be able to afford somewhere to live. But what actually happened was transactions fell off a cliff, no deals were happening. They are starting to creep back in now, which is a good sign for the overall health of the housing market. Mortgage rates are steadily coming down. Things look in a better place. We didn't quite have the crash in the sense of a house price crash, but John's certainly right. We have now looked to turn a corner.
And of course, we had Murdoch's REA, the Australian real estate listing company, bidding for Rightmove, or at least expressing interest, for Rightmove. Which is the housing listings website we all like to pore over secretly in our spare time.
Or not so secretly.
But that's a great sign, isn't it? That, listings might start to pick up, that Rightmove is a great business. It added £1 billion to its market value when this news came out on Monday.
Well, Dave, what you said there was interesting because, all of us looked at each other when you mentioned about going on to Rightmove and sort of being nosy. And that shows that regardless almost of the state of the housing market, we're all nosy. We're all on Rightmove. And when deals aren't happening, there's listings going on. The supply of homes for sale is actually really high in terms of compared to the short term at the moment. So Rightmove is almost slightly insulated from what's happening truly in terms of deals in the housing market because people are renting, people are nosy, people are looking at their future prospects for home buying, even if they think it's a few years down the line. So it's an interesting one. And I think the fact that they are kind of insulated in that way makes them a decent bet.
But I think we're in a slightly schizophrenic August, September period because as you say, things feel like they're unblocking a bit with the sense that rates are coming down potentially more slowly than people would like, but that's the direction of travel. But you've got the government saying, be afraid, be very afraid. All of us as sort of political analysts and observers, you do not know the extent to which you are being spun. So you are supposed to be very afraid. And then when the budget eventually happens, you're like, oh, that wasn't so bad after all. Let's hit the shops and hit Rightmove again. Or whether they're doing it because that's what they're going to do and they just want you to be very aware. So I think in that, with that kind of uncertainty, there probably will be more of a chill than necessarily the economics would suggest.
Yeah, I mean, it makes sense, doesn't it, to get us all worried. They've just taken over.
It's
from
classic.
The Conservatives. Yeah.
The concern would be that they're not. It's not expectation management. It's the real thing.
And we're in a different situation, aren't we? The last time Labour came in with a landslide, we had the Blair administration, famously talking about being very comfortable with the filthy rich. Or
as long as they pay their taxes.
As long as they pay their taxes. But we'll find out, won't we, in a few weeks, how friendly is this Labour government to wealthy Americans who want to come in and buy £32 million houses in London.
Damian, thank you so much.
It's been a pleasure.
Thanks for listening to this week's In the City from Bloomberg. This episode was hosted by me, Francine Lacqua, with David Merritt and Allegra Stratton. It was produced by Summer Sadi. Production support from Isabella Ward and sound design by Moses Andam. Brendan Francis Newman is our executive producer. Sage Bauman is head of podcasts. Special thanks to Damian Shepherd. Please subscribe, rate, and review wherever you listen to podcasts.